Hey everybody, it's Pete Carmasino here at Chaikin Analytics. I'm the Chief Market Strategist, and this is the Chaikin Power Feed video series. So once a week, we kind of go over some articles we talked about. I'm picking on mine because it's just so relevant and topical about Rivian. RIVN is the symbol. It's an electric vehicle maker. They've been struggling and in trouble now for over a year. I started writing about this well over a year ago when they were added to the NASDAQ 100 index. I called it a virtue signaling act, meaning yes, obviously clean energy is sort of a buzzword. It's a narrative and all this thing. No one wants pollution. Let's put it that way. The idea of delivering this and making this a mass market product is just a struggle. Ask Elon Musk. We'll look at Tesla's chart today. We're going to focus on Rivian, but I'm going to look at the automobile industry in general. And I'm going to bring up two ETFs that basically focus on clean energy and electric vehicles. And you're going to see exactly why this group is having trouble, because we do top-down analysis. We talk about the groups in general. We say always look at the group itself. If the group is struggling, it's likely the stocks are going to struggle in those groups in tandem with the actual ETF. All right, let's dig in right now. All right, here we are at the Rivian chart. Again, this is the Chaikin Analytics platform. The first thing you should notice, it's bearish. And it was bullish for a little bit, but I'm going to call this out for a little bit. What's going on is that they had decent numbers on the top line. Sales were growing, but across the years, again, 22, 23, they were losing 6.8 billion in 2022, and they lost another 5 and change, almost 6 billion in 2023. So my point to you is that this stock is not the stock that you want to be associated with. A lot of things going on here. Now, when they increase sales, the power gauge upgrade, I just want to point something out. The upgrade came at around 15, we'll call it about $15 or so. It traded a little bit, very choppy, very unpredictable. A lot of people upgrading it and talking about it. But then it was downgraded here, right? We downgraded it to a neutral at roughly around 18. So about 15 to 18, this fooled the power gauge a little bit. But the idea here is that the trend broke down. The industry itself is showing strong, but we're going to look at that in general. I've got the whole industry right here. But in general, this is in a downtrend. It's a struggling stock, one to avoid. So let's look at other names that you might be familiar with, like Ford. They're trying to sell electric vehicles. They're having trouble as well. Apple just canceled their electric vehicle program after a 10-year try to figure out how to make these vehicles work, not only for the individual consumer, but also for the company to be profitable, and they gave up. GM, same situation, better looking chart, I would say. They've got a lot of vehicles that they sell, between Ford and GM, they're selling a lot of pickup trucks and a lot of interesting new cars. There's Ferrari, that's in a different category altogether. No problem here on this chart, though. The stock's looking like it's in an uptrend. It looks great. Now, there are a bunch of other names in here we can go over. They're just not worth talking about. But we're going to look at Honda for sure, also in a nice uptrend, and Toyota, who never ventured into the full electric vehicle market. You want to know why? Because they know it's unprofitable. They're a big hybrid type company. All right, and next, obviously, here we need to look at Tesla, right? We talked about it. This is obviously the premier electric car vehicle manufacturer, among other things under this ticker, including previously owned or named Twitter, which is now X, and obviously SpaceX and some other things, some solar businesses and stuff in there. A lot going on under Tesla, not just an automobile company. However, it's their flagship product, and this stock is also in a downtrend. I mean, you can't make this up, folks. These are, again, lower highs consistently. It looks like a string of garland on the downside. You got lower lows, and it continues down, having trouble to break out of this downtrend. Again, another manufacturer here in the electric vehicle area that is struggling, even though they have the premier brand. Now, let's look at these two things. All right, we're going to look at KARS, which is the electric vehicle ETF. In a downtrend, yeah, 8 bears, 1 bull. I'm curious, what's the bullish name in there? Solar Edge. All right, not exactly sure, but it's been in a downtrend. We might see things firming up from a fundamental standpoint. Still not a buy, even though the power gauge likes it. That relative strength's got to get in a better spot before we look at it. I'm going to look at ICLN, another ETF, a global energy clean ETF, also in a downtrend. Folks, what I'm saying to you is that when the group is in a downtrend, you're likely going to try to bottom fish this and maybe buy it, at 17. Then you're going to buy it when it looks like it's breaking out at 16. Then you're going to buy it again at 14. Then you're going to, you might get an average price down here, but that is dead money when you try to do that. Bottom fishing is not the place to be. All right, folks, that's it for this week's Chaikin Power Feed video series. Again, I'm Pete Carmasino, the Chief Market Strategist. Thanks for tuning in. We'll see you here next week.